Definitely markets losing a little more, and now the number of decliners are more than the number of advancing stocks. Remember, in the morning when we were braving the global trend, we were actually 2 in the green for 1 in the red. Now we are about 1.2 in the red for 1 in the green. So clearly the initiative of the bulls is slipping as the global bears start to make their presence felt. We can decouple for a bit. We can't decouple all the way. And I think that's the profit taking you're seeing. Also, we must remember it's Friday. It's been a good week of outperformance and people will not want to take the risk over the weekend. You never know what can happen in global markets. So perhaps that's also abetting the selling. At this point in time, almost 0.5% down on the Nifty and on the mid-cap stocks. It's only Nifty Bank which is holding up. How are commodities helping the entire story? The first trades have started coming and we have Manisha Gupta joining us. Good morning again, Manisha.
Thank you so much for that, Lata. Well, after 5% decline in the crude oil prices overnight and hitting a 17-month lows for the US crude oil prices, there is some buying that you are seeing in the Asian markets right now. One, of course, after that kind of a decline, there would be some bargain buying on the lower side. And then it also has to do with the OPEC General Secretary statement saying that the OPEC and the members, allies that is, will have to cut more than 3% as against discussed 2.5% in sense of output from 1st of January to ensure that 1.2 million barrels per day actually gets taken off from the global supplies there. And that clearly seems to be supportive because until now we have seen markets actually question the OPEC and the allies figure. The compliance has been a big doubt as well. And the markets do understand that it is going to be difficult for Russia to start cutting it with that kind of number as the winter months approach. At this point in time, for much of November and December, we have seen record high production continue from Russia, US and also from Saudi Arabia. So the OPEC Secretary General statement coming in that sense has been supportive for the prices. Take a look at the gold and silver prices, and this week has been a weaker one. Every single day we have seen further decline come in for this space. One, there is not so much of a physical buying coming in from India. China also seems to have paused a bit. And then there is the strength in US dollar, the Fed interest rate hike and the statement for 2019 also doesn't augur well for the prices. So some bit of a pressure is what you've seen for that one there. For the base metal prices, there is some bit of a good news. One, China has, directed stimulus for small and private firms going forward in sense of loan assistance. Also, steel prices are trading at a 5-week highs after we see the inventories decline. Also, the winter pollution concerns have started to bite in. And then a couple of states or cities in China also have allowed or eased property market, the kind of restrictions that were there earlier. And that seems to be supportive as well. In any case, many of these base metal prices have been oversold, so some buying has been on cards. We have seen the copper prices go off its 3-month lows, and there is some support that we are seeing in case of nickel and zinc as well. That's purely because the steel prices have gained by nearly 4% in last 2 trading sessions, and the iron ore prices have been supportive as well. Trading strategies, and we have them from ComTrends today. It is a buy in case of gold, 31,550 is a target from them, but a sell call continues for industrial commodities. In case of copper, a downside target of 416. A sell call in the crude oil prices also continues with 3,175 as a target on that.